Welcome to SDMIC classes. Where there is a will, there is always a way. Nothing is impossible for a brave and hardworking person with a willing mind. We are continuing with our chapter 1, Introduction to Partnership and Partnership Final Accounts, part 14, the 14th class. Hope you must have watched the previous classes. I believe all you must have understood. Now I request you all to pay attention. The last class we discussed trading account, then the details of trading account, what is trading account, then profit and loss account and the details of profit and loss account and the examples of the pro forma of profit and loss account. And now today we will discuss balance sheets. Okay, so first I will just show you combined profit and loss account, trading profit and loss account. In the last class we discussed trading account separately. Trial balance we discussed first. The format of trial balance, two types, two methods I show you, and what is the importance of trial balance, how to prepare a trial balance, and that I have shown you. So before preparing the final accounts, you must prepare a trial balance, and once the trial balance is prepared, some adjustments are coming, and adjustments entries are passed, and final trial balance is prepared. And if not, if it is directly making after the first trial balance, if the adjustments are directly the effects are giving to the final accounts, then the adjustment entries, how to make the adjustment entries, that also we discussed. Okay, so now in the last class we discussed trial balance, how to prepare the trial balance, and trading account separately and profit and loss account separately. The format I have shown you. Now, today we will discuss balance sheet. So before we move to explain the balance sheet and to show the format of the balance sheet, I will show you how trading profit and loss accounts are prepared combined. So in the last class we prepared, we showed the trial balance, format of trial balance, and trading account separately. See, this is a trading account separately we have prepared, and then profit and loss account we prepared separately. Okay, so profit and loss account. Now in the manufacturing concern, when we are making a profit and loss trading profit and loss account, it will be prepared combined. So like this, I'll show you. So the trading profit and loss account. So here it is written, see, trading account for the period. Here it is written profit and loss account for the period. Actually, when we are making a balance sheet, final accounts, the results of the final accounts is the profit, the organization is made profit or loss. That to know that a trading profit and loss account for the period is prepared, for a particular period is prepared. So now I'll show you. I mean, so exactly the same. This part, no, this trading part is kept up. See, like this, and then the profit and loss account part is kept below, like this. There is no any other changes, but here it is combinedly, it is prepared on in a same page only. So it is like that. Now the sales, whatever it is shown here, this is the same thing. See, these are direct expenditure and direct expenditure, all direct expenditure. These are direct expenditure, and these are direct income. Direct income. Okay, so this. And when the profit and loss account, if the direct income is more than the direct expenditure, there is a gross profit. The direct income, and this is the direct expenditure in the trading part, trading account part. So if the direct income is more than the direct expenditure, there is a gross profit, and that gross profit is brought down here. Okay, in this profit and loss account. So here we are not writing separately profit and loss account, because it is already given the heading trading profit and loss account for the period. So if the direct expenditure is more than the direct income, then there is a gross loss. In that case, it should be brought down to gross loss brought down. Here it is here. Normally in the case of business, most of the cases there will be a gross profit, and gross profit will be brought down here. And then other indirect income, indirect revenue. This we have explained the last class, indirect revenue. And then indirect expenditure, the same heading I have taken here, indirect expenditure. And if the gross profit with indirect revenue, indirect income, is the total of that is more than the indirect expenditure, then there will be a net profit. Okay. And here also, on the contrary, if the indirect expenditure are more than the gross profit and indirect income, there will be a net loss. Okay, net loss. So now, when in the case of if there is a gross loss, that also should be distributed to the partners as per the ratio provided. If there is a net profit, then that case also that it should be distributed to the partners capital account or partners current capital account as per the ratio mentioned in the partnership deed as agreed. So you got it now. This is the thing how we are making it combined. Okay, this is we are making combined balance sheet as a combined trading profit and loss account. Trading profit and loss account. This is easy. It's not difficult. Here the trading account and here the profit and loss account, and it's a combined. It's a most of the all in manufacturing concern. This way it is prepared. Trading profit and loss account. Okay, upper part kept as a trading account and the lower part kept as a profit and loss account. Now we will go to the balance sheet part. Okay, let's see. Palmer describes the balance sheet is a statement on a particular date showing one side the trader's property and the possessions, and the other side the liabilities. Means balance sheet means it is a balance. All the assets of the organization, assets of the business is balanced with the liabilities. Liabilities include the proprietor's capital or the partner's capital and the other outside liabilities. Okay, so we have learned in that when we were learning the net worth. That time we have learned that what is a net worth like that. Means the total assets minus outside liabilities. That is net worth. Net worth is partner's capital plus reserves or other accumulated profit, reserves, etc. That is called. And then that internal means capital account plus other liabilities should be matched with the assets of the organization, assets of the business. Now, balance sheet is a financial statement showing financial position of the firm on a particular day. Any day, suppose if it is not necessary. Whereas we learn that means the profit and loss account is prepared for a period. If it is for a month from 1st to 30th or 31st, or if it is a 3 months, then it should be mentioned for 3 months from 1st April to 30th June. If it is 6 months, 1st April to 30th September, like that it is. If it is 12 months, it is and in general for the last it is 1 year. This is 12 months. So that will be starting from 1st April to 31st March. Whereas balance sheet is on a particular date. For example, at the end of any particular date, if it is prepared, that financial position of that particular day it is prepared. All liabilities are recorded on the left hand side of the hand side or liability side of the balance sheet, and all assets are recorded on the right hand side of the balance sheet. You got it now? All liabilities are recorded on the left hand side or liability side of the balance sheet. Assets are recorded on the right hand side or asset side of the balance sheet. Balance sheet is not an account but a statement. So you will trading and profit and loss account. All other things, no, customers account, debtors account, creditors account, all these are accounts. Trading account, profit and loss account, these are accounts. We call this account. But balance sheet, we will not say that balance sheet account. We will say that balance sheet is a statement, financial statement. Okay, balance sheet is not an account but a statement showing financial position of the firm as on a given date in the form of assets and liabilities. It should be tallied. So now let us refer the working note for illustration. I will explain you the format of the balance sheet. Okay, we have learned all these things: trial balance, trading account, profit and loss, and combined trading profit and loss account. Now balance sheet. Let us see move to the balance sheet. Now the rule: all tangible and intangible assets in the trial balance to take on the asset side, all fixed assets, non-current and current assets on the asset side, preliminary, prepaid, advances given, etc. are taken on the asset side. These all are taken on the asset side of the balance sheet. Okay, the rule, you must understand the rule. Once you understand the rule, you can prepare a balance sheet very easily. It's not helpful for now for your this particular HSC 12 standard. It is you think that it is stopped there. No, it will help you in future, means BCom, MCom, or CA, ICWA, or CMA, CFA, whatever you want to just do in your future. So this will help. So you should know, means so this is the basic thing. All tangible means visible and immovable, movable, all these properties means tangible, can see. These properties are taken on the asset side of the balance sheet. Intangible assets which cannot be seen, like goodwill, patent, trademark, all this, these cannot be seen. So these also taken on the asset side of the balance sheet. And all fixed assets, that is movable as well as immovable properties, are fixed assets, are that is called a non-current assets, are taken on the asset side. And current assets means assets which can be liquidated in a period of 1 year, means that's a short term, means can be liquidated at any time, like that way it is. The current assets are taken on the asset side of the balance sheet. Preliminary expenses, prepaid expenses, advances given, loans given, etc. are taken on the asset side of the balance sheet. Now the liability side, what will be taken on the liability side? Capital of the, if it is a proprietor, is a proprietor capital, or if it is a partnership concern, the partner's capital, and if it is a corporate company, the shareholdings. The shareholdings are the capital investment in the company. So shareholdings, etc. In this case, partner's capital account. The capital, because we are learning partnership business. Okay, partnership accounts we are learning. So partner's capital, reserves and surplus, loans and liabilities to take on the liability side. Outstanding liabilities, advances received, etc. Bank loans, etc. means all liabilities are taken on the liability side of the balance sheet. Now I will show you the pro forma of balance sheet. Balance sheet, just see that balance sheet as on particular date. Okay, as on particular date it is. So balance sheet is this financial position of the company as on this particular date. It means like that. Now see the pro forma of the balance sheet. One side it is liabilities, the other side it is assets. Okay, we also take the means this trading profit and loss account. We have taken two columns, inner column and outer column. So inner column and outer column. So capital accounts. What capital accounts of A, B, C plus, means if it is a current this capital account is taken as a current capital account, is a fluctuating capital account, or it is a fixed capital method. If it is a fixed capital method, we will take like this: capital account A, B, C, partner A, partner B, partner C. This total will be taken here. It is prepared if it is if the capital accounts are prepared, maintained as a fixed capital method. So under fixed capital method, balance the the first capital invested in the business is kept as a fixed. That will not change. And at the same time, whatever the other transactions, means withdrawings, any additions or commission, salary, etc. are taken into the current account, partner's capital current account. So in that, so partners, this will be prepared separately, and the summary is taken here. Partners current account, credit balance, A plus B plus A, partner B, partner C. Okay, that will be taken outside. So general reserves and profit and loss account, reserves and surplus, profit and loss account. This comes under reserves and surplus. Then loans. This is just a format only. Depend upon the nature of the organization, nature of the business, the structure means that account heads will change. This will be very short. Make it short. We can make it in a single page, one page. So bank term loan, this is for your explanation I am giving in detail, otherwise it is not like this. We are making it a separate sheet of paper, schedules are made and it is prepared, kept on this, so that means at the first glance, in a glance we will see the financial position of the company. Means it will be summarized all the if there are more than one or two items in a single head. So now the loans and loans, bank OD, if it is a cash credit, then CC cash credit, mortgage loan, NBFC loan, unsecured loan, loans from partners, etc. are taken here. Then sundry creditors, add or less any other adjustments, provision for discount on creditors if there is anything, bills payable, other liabilities, outstanding expenses, income received in advance, provision for taxes, etc. These are taken here. Now the asset side, it is taken, goodwill is taken, then this is an intangible asset, patent, trademarks, etc. will come. Now then there is these assets are taken in two types, current assets and non-current assets. So non-current assets are fixed assets. Fixed assets are of a movable as immovable properties. So land and building less depreciation. Then after deducting the depreciation will go to the profit and loss account. And this from the total of the assets, the depreciation is deducted and the balance will be taken to the outer column. Same way, plant and machinery less depreciation. Like this is then furniture and fixture less depreciation, taken into the outer column. Then equipment less depreciation, vehicle less depreciation, electrical installation less depreciation, AC, etc. all will come into that. IT nowadays, IT is a very important thing because too much of investments are doing in IT. Means crores of rupees worth networking and servers, etc. are installing, PCs and tabs, laptops, etc. That will then softwares, means expensive softwares, etc. are taken. So computers and IT items less depreciation, leasehold or freehold premises less depreciation, patents less depreciation, tools and equipments less depreciation, stores and space less depreciation, etc. Then comes the investment part. Investment, the business invested into other things, other activities, other companies or other bonds, government bonds, or invested into other private other companies for gaining some high rate of interest, high rate of returns. Then prepaid expenses, outstanding income. It's not, this is an outstanding, here it is outstanding expenses, outstanding expenses, whereas this is an outstanding income. Loans and advances, closing stock, sundry debtors, less bad debts or less provision for discount on debtors, etc. and the balance will be taken on the outer column. Then insurance claim, receivable, bills, receivables, cash in hand, cash at bank, partners current account. Lastly, the partners current account, because all the activities are done, and after that means whatever the trading profit and loss account, that will be taken to the current partners current account. If there is a loss, means if there is a debit balance in the current partners current account, it will be taken here. If there is a credit balance, means the partners current account is, there is a current balance account, that will be taken in the liability side. Understood? No. So the difference, if while preparing that current partners current capital account, partners current account, if there is if the debit side is more than the credit side of the partners current account, it will be taken on the asset side of the balance sheet. That means there is a deficit. And if the partners current account is the credit side is more than the debit side, it will be taken on the liability side of the balance sheet. That means there is a surplus. Okay, that is the thing. So now once you prepare the balance sheet, it should be tallied. Okay, the balance sheet means it is like a balance, means what, as a weighing balance. You know that, no, means there is a two things, two pans. One first pan, left pan, and right pan. Okay, pan of the balance sheet. Suppose if we put here 100, we put here 99. It will not match the balance. It will be the left side will be more. If there is a 99.001, then 2 it will not, the 99.9, then 2 it will not match. It should be 100. Okay, it should be equal. Okay, like that it is. So now when we prepare that, when I will show you some examples of working, so that now it will be very clear. So we don't have that much time to just show, means all the problems to be worked out. So I will show you some 2 or 3 examples, and the details and detailed working for the exercise given in the text will be worked separately and kept as a note, because it will be very vast and very extensive question answers and working. Whatever sums solutions given in the textbooks is not given, it is already in the textbook, and we can share the there's a there's a PDF files, everything is given there. The problems, some of the problems are solved in the illustration part, and some problems along with some additional problems you have to work out to practice, so that it will be very easy, and you will become an expert in the subject. So that will be worked separately. Now I will show work out some 2 or 3 sums in the next class, so that this trading profit and loss account and balance sheet part will be complete, and it will be very, very easy to make a balance sheet. Whenever you are asked to prepare a final accounts, you can very easily make. Only you should understand the logic, the concepts, the terminologies, you should understand the means whether it is a capital expenditure, revenue expenditure, is a balance sheet item or a balance sheet item. If it is a balance sheet item, it is a asset side or credit side, liability side. These things, if you understood, you make that, and the adjustment entries we discussed in our last classes. The 22 points we discussed, and 7 other additional points also we discussed. If you understand all these concepts and all these things, it will be very easy. And the steps to prepare a final accounts, how to make the balance sheet, that is also explained. Means in that way, if you just read and just practice it, it will be very easy, and you will become an expert in the subject. Okay, you can score full marks in the subject, and you will not miss a single mark. So there are examples of my students. They are getting very good marks, 100% marks. That is what I want from my students. Though I may not be seeing you, I can see many of the students. They may be enjoying the result. Okay, they will get definitely, because those who are directly in contact with me, they are giving the results of the thing that they got, and some students call up and say, sir, I got this, and some are mailing all these things, some send WhatsApps and messages saying that, okay sir, we got this with the help. So that way you have to just put your attention and study it. Now today we will conclude. I won't stretch it more. Now next class I will just explain you 2-3 sums we will work out that will help you to understand the concept, and very clear. Okay, I request all my students to study regularly. Regular practice is necessary, because if you have a intention to just gain something, you have to do some hard work also. Means you have to, without pain there is no gain. That is a universal rule. So if you don't understand, watch again and again, because I want my students to score full marks in the subject, or just close to 100% mark. That is must. Whoever learn under my this thing, they must score full mark, or at least 99, 98, like that range. Most important, you all must make a strong base in the subject that decides your career. आपका future के लिए, for your future, you make a strong base. That is more important, because what you are studying is that should be perfect and should be thorough. Means then even at the midnight also, if somebody asks what is that, you are in a deep sleep. When somebody asks you, wake up you and ask you what is this, you should say, give that answer, right answer. That way you have to make it. Please read again and again, learn and practice to achieve your life's goal. Help each other to grow together for a better India. This again I am telling you, means every time I am just repeating you, because our economy is going very fast, and we are now the fifth largest economy in the world. Will be reaching the fourth position and third position, and maybe in the second position in the very coming future, because it is growing. The graph is growing up. Okay. So when the economy grows, there will be more and more opportunities, and there will be more and more areas, and more opportunities to get job and doing business and all this thing. It is not necessary that you should do a job only. You can do a business also. When we are doing a business, you should know that is then also the knowing of accounts is very, very important. Okay, so that no one can cheat you. So that is also very, very important. So, or if you want to go for higher studies and just get a professional job and etc., very high level job, then too it is very important. So when our economy is growing, there will be so much opportunities coming. Manpower requirements will be very, very very high in our country. Going to be very, very high. More talented people are required. So I request all you to share the videos to reach more and more people, so that many students and public can take the benefit. Okay, this is always I am requesting you. Please circulate the video, circulate the message, share the videos, and just ask to subscribe and just study. Many other useful videos I am just going to upload one by one. Okay. Thank you.